Hi guys, I hope you're doing well today, and thank you Ajit for the introduction, and also to Quantinsti for the invitation to share the project I completed as part of the EPAT program. I just have one slide today that I'll talk to, and it will be in general in nature, and I'll address the agenda items suggested by Quantinsti, which are shown here on the slide. Before I start though, the project I selected was to build a Python-based platform that would allow me to test the performance of different strategies on portfolios of stocks, and the data for the analysis was to be downloaded from Interactive Brokers. The objective was not to demonstrate the efficacy of any particular strategy or financial concept, rather it was to provide a framework upon which I could build into the future. So this talk is of a general nature and focuses more on the learning journey rather than offering up any money-making strategy insights. So my sincere apologies for that in advance. So starting with the first question, what was the motivation for the project? And I guess I'll take a step back. And the more appropriate question for me is and I guess for yourselves, is what motivated me to enroll in the EPAT program? I've actually been trading algorithmically now for some 20 years using TradeStation, which, by the way, is a fantastic platform. My approach is to trade various strategies on portfolios of both long and short positions to provide some diversity and also to attempt to smooth the equity curve. Now, one of the limitations, however, is that TradeStation only provides access to the US markets. Certainly if you're based in the US, you can only access US markets. So the trading of portfolios from different countries as a way to further diversify and manage the equity curve, that just isn't possible. But that said, I also had an account with Interactive Brokers for discretionary trading and was impressed by their global market access, and also noted they had the capacity for trading automation via a range of different languages. The barrier for me, and this was a big barrier, is I really had no idea whatsoever how to migrate my TradeStation strategies over to Interactive Brokers and then automate the execution. So the first question for me was, which programming language to use. And after quite a bit of research and reading, thankfully I landed on Python. And then given I had no experience with Python whatsoever, the second question was who could offer the best training? And again, after a little research, I located and landed on the EPAT program. And that certainly ticked the Python box, but it also offers a very, very broad curriculum, which if you're looking to trade professionally is incredibly useful. So 4 months into EPAT, my choice for a project was fairly easy, which was my starting objective: develop a platform to connect with Interactive Brokers using iBridgePy and test the performance of various strategies on stock portfolios, with a longer term goal of being able to code and test my TradeStation strategies and integrate them into the platform and deploy them for live trading. So that was the motivation. So in terms of the approach, for me, this was quite a daunting task. As before starting EPAT, as I mentioned, I had no previous exposure to Python, and 4 months in, the concepts were all still rather vague. So my first step was to revisit the extensive material offered as part of the EPAT course, especially as it relates to Python. Then also understand the trading strategy examples provided as part of the EPAT course, but also search out the trading strategies available online. And if you do a web search, you'll find an inordinate number of Python codes for various different strategies you can cut and paste and begin to play with. So that was the first step. And then for the purpose of this project, I used a fairly simplistic strategy to build out the platform. Firstly, daily data for a single stock was downloaded from Yahoo Finance. A buy signal was generated when the price fell below the lower Bollinger Band, and a corresponding sell signal generated when the price rose back up above the simple MA. And conversely, a short signal was generated when the price exceeded the upper BB, and a cover signal when the price fell back below the same simple MA. The daily and annual returns were then calculated. And the top right plot there shows the strategy, shows the candlestick stock prices, the Bollinger Bands, and then the lower subplot shows when the positions are just long here, when the positions are actually open. I then downloaded further data from Yahoo, set up a list of tickers to use as a portfolio of long positions, and coded a loop to generate the buy-sell signals, and then calculate the P&L for each position, and also the P&L for the overall portfolio. The next step was to connect with interactive brokers to download the stock data rather than downloading it from Yahoo. For this, I installed iBridge Pi to serve as the bridge between the Python console and the interactive brokers interface. And with that installed, I then set up a paper trading account with interactive brokers, set up the required data subscriptions, and then reran the strategy to test the functionality. And I will say the EPAT lecture material from Dr. Liu, who is the author of iBridge Pi, was very, very useful here. So once that was running successfully, I updated the strategy to loop through a portfolio of short positions as well as the long portfolio. And with all that running well, then prepared some simple analytics to evaluate the performance of the strategy and the portfolio, which we can see to the right here. The first row shows the cumulative P&L for the trading period for the individual stocks. The first shows the stocks within the long portfolio, the middle, the short portfolio, and the right is the long and short positions combined. The second row shows the overall cum P&L for the portfolios. Again, the first is for the long, the middle for the short, and the right for the overall portfolio. Now, a key issue with deploying strategies that trade intermittently on a portfolio of positions is to ensure your account size is neither over nor under leveraged over time. So the lower graph plots out the capital deployed for trading the long, short, and overall portfolios, and can certainly be used to set your position size for each of the stocks, so you can be compliant with whatever leverage objectives you set yourself. So what were the challenges that I faced while doing the project? I guess for me, the primary challenge was the lack of proficiency in Python. Although this project did drag me kicking and screaming up the learning curve. I found iBridge Pi and interactive brokers quite fiddly at the start to get running, at least certainly relative to TradeStation, which is very robust. But once set up and once you know what you're doing, the iBridge Pi and interactive brokers interface works like a dream. So how did I overcome the challenges? I guess for me, I mean, I've always been incredibly passionate about trading. And I think it takes unbridled perseverance. Certainly for me, as the learning curve, as I highlighted, was very steep, and at times immensely frustrating. The EPAT faculty were incredibly helpful when I was hitting dead ends, and also the iBridge Pi have a good community as well, and have a very robust suite of online documentation, which was also key to successfully linking into the interactive brokers site. So thanks guys for your help and support. That's greatly appreciated. So what were the learnings for the project? That's a great question. For me, despite the rocky start, I've been programming extensively for the last year now. So this project gave me a very good start, and I now feel very, very confident working with Python and the various different tools within that ecosystem. So that's certainly a win for me and a very important skill that I've acquired. On a more personal note, given the challenging start, I think the journey's highlighted the importance of setting goals, staying focused, and playing the long game. And I think these were certainly very effective in helping overcome, significant short-term barriers and frustrations that I went through at the start. So next steps. I guess it's been over a year now since I completed the project, and I've certainly been, as I mentioned, very, very busy and completed many of the planned post-project next steps. Initially, I focused on coding the TradeStation strategies into Python and used those to replace the Bollinger Band strategy I described for this project. Arguably, the most challenging aspect was replicating the suite of trade management features. What could be achieved in TradeStation with 50 lines of code using their inbuilt trade management functions took well north of 1,000 lines of code in Python. So that was certainly good to get that coded and working. I then built a module to send orders to the interactive brokers trading desk. Then tested those using their paper trading account, which is great, by the way. And then once that was working well, the strategies were deployed live in the market, and thankfully they're continuing to perform well today. With that done, all in, it was probably well north of 1,500 lines of code just on one screen. So with that done, I began streamlining the code into functions so the primary program could be read on one screen. And certainly this was well worth the effort, as it made the code more robust, easier to manage, and then change and import and export between different strategies. I've then upgraded the code to use intraday data, and then loop through different portfolios for different time periods, and then combine the results to evaluate longer term performance. So as we begin to wrap up, building on the framework I developed as part of the project, I've now got a very powerful platform to evaluate the efficacy of different entry signals, trade management strategies applied to different portfolios on varying timeframes with extended data sets. And I'm looking back decades to test these various aspects, which of course is an invaluable part of understanding your edge and then getting comfortable with deploying before you deploy a strategy live into the marketplace. So current and near-term projects now include the integration of machine learning into the platform, the use of dynamic portfolios where the stocks available to trade are ranked real time, and varying entry and trade management signals with market conditions. So that's all I had to share, really. And I think I'm getting close to out of time. So I'll wrap by, again, thanking Quantinsky for enabling what has been a prolific journey of learning, and for the opportunity to share my experience and the project with you today. So with that, thank you very much, and questions.
Sure, Mark. Thank you. Thank you very much for being a part of this journey with us, and a great session from your end. And thank you for sharing the learnings with us. I will now just have a couple of questions asked from the audience here. So first question would be, as an experienced trader, what type of annual returns are you able to consistently deliver over the last 5 years? The person asking is a newbie, and he wonders what is realistically achievable. So I think it all depends, but I think you would be the best person to answer.
So I think that's a great question, and that's a question that's often asked. And I think a more important question is what are your objectives? And what are the reasons? If we look at the last 5 years, if you look at the performance, at least of the US stock market, it's been on a prolific bull run. I mean, well beyond beyond norms. So if you're trying to trade short, if you've got a portfolio that's 50% short when you're trading that environment, that can be somewhat challenging. So in terms of my objective, what I try to achieve is I try to approach the performance of the S&P 500, but actually reduce the volatility, significantly reduce the drawdown that's experienced. So I think if you were to look at the returns from the S&P 500, that would be a good proxy for how I'm performing, but with significantly less drawdown.
I hope that answers your question. If there is any, you can always ask back. Would you suggest the EPAT course for those who don't have any programming background whatsoever? How much value would this course add for the person who doesn't even know the most basics of the programming language?
So I think I've had this conversation with EPAT earlier, and one thing I'd recognize is that EPAT provide a significant amount of material to allow you to become more conversant with Python in advance of starting the program. And the program is very much focused around Python. So if you can't program in Python, then I would suggest you're not going to get the full benefit from the course. I think my issue was I didn't give sufficient attention to the advanced material that was provided. So as I mentioned, the learning curve, I was dragged kicking and screaming up that learning curve. So I think if you want to get the most from the program, being semi-proficient in Python would be a great benefit, a great foundation. But if you don't, it can certainly be done, but it will be more challenging. That was my personal experience.
Thank you for sharing that, Mark. And I know you are wanting to hear from the students' perspective, but recently, Mark is from batch 42, and very recently we have started with preparatory sessions. Just want to also inform you, Mark, that we have started with Python preparatory sessions, which are before the actual orientation, even before the orientation session. Plus, we have added 4 tutorials also on for those who are not who want to have additional learning experience. You have additional Q&As. We have started with the additional tutorials which happen after the Python sessions, immediately after that particular session. So that is what we have added. But yes, that's what I wanted to just add to that. Okay.
Yeah, that's great to hear, and I think the participants will find that exceedingly helpful, at least those with no prior experience.
Right. And also these sessions are available for lifetime. And Mark, also, if you are not aware, you also get the most recent lecture recordings from the latest batch added to your alumni portal. Okay, that's also just I wanted to just add one point in that also. Go to the next question now. In the context of trading, can you please drop some light on Monte Carlo simulation and Brownian motion, if you want to answer that?
I certainly use Monte Carlo simulation as part of my decision-making job and decision tree as part of my day-to-day job. But in terms of trading, I've not actually used Monte Carlo simulation, so that's probably not an area I'm probably well positioned to comment on as it relates to trading.
Okay, no problem.
Sorry about that.
No problem. What was your objective for switching from TradeStation to Interactive Brokers, and did you achieve those objectives? Uh, which all markets do you trade or plan to trade in the future via Interactive Brokers?
So I'd mentioned it at the start of the presentation. TradeStation actually does provide an interface where you can trade TradeStation strategies and link in and execute them via interactive brokers. But for some reason, and it must be a regulatory, some regulatory driver, you can't actually access that capability if you're living in the US. If you're in the UK or in other locations, you can actually do that. So from my perspective, I could only, using TradeStation, I could only access the US markets. Now, one of the things I like about trading both long and short portfolios is they give you some level of diversity and they allow you to attempt to smooth the equity curve. I'm just as an aside, I'm also a resident of the UK and Canada, and sort of invest there as well, and see myself sort of ultimately living in those locations. So the FX is also an important risk to me, is being overly exposed to the US dollar. So being able to sort of have portfolios of, let's say, Australian, European, Indian, UK stocks, having portfolios set up to trade those, give me, because they are correlated with the US markets, but less so than within the stocks within the US portfolios. So that gives me additional opportunity to diversify, and it also removes some of the currency risk as well. So that really was the driver behind moving away from or sort of creating an adjunct to TradeStation where I could sort of expand the portfolios and mitigate some of the FX risk. I'll carry on using TradeStation because it's a fantastic tool, but interactive brokers gives me that more global reach.
Okay. Thanks very much for sharing. So the two of the audiences, two of the people from the audiences have appreciated for wonderful presentation and mentioned good things here. So thank you very much, Bala and Mark. And just last two questions we will take, and then we will wrap up. How long did it take you to migrate from TradeStation to an operational framework? And what recommendations would you give to someone who wants to do the same?
To do the project and set up the framework, similar to Bala, didn't take much more than a month. As I mentioned, it depends on how you trade and what you want to code. My trade management rules are fairly complex. They use staged exits, trailing stops, maybe market regime change switches. So as I mentioned in TradeStation, there's functions that you can use to trade that or to sort of set that up, which is quite nice. Within Python, it becomes a lot more complex. And as I said, I found that replicating the TradeStation code took around 1,000 to replicate the TradeStation trade management rules took about 1,000 lines of code. And again, it was during the period where I was gaining proficiency with Python, so I was hitting a lot of dead ends. But it probably took me about 4 months to get it working. But I also looked upon that as an opportunity to learn as well and expand my coding capability. But that was a fairly sophisticated suite of trade management rules that, as I say, took 1,000 lines of code. If you were looking at just sort of similar to what I presented, the Bollinger Band strategy, that would be very easy to code and probably wouldn't take many lines of code at all.